Hey traders, it's John Fortune here, this week's weekly Forex Forecast. I hope you're all having a fantastic weekend. We're going to continue this week with the longer format, the more in-depth format, since quite a lot of you seem to like that last week. And so again, we're going to start off by having a quick review of the key events for next week. And we're actually going to look at an event last week, the US CPI data, as well as an event which is coming up next week, because this is very important for what we're looking at this week as well. After we've had a quick look at the key economic events, we're going to do our relative currency analysis. So we're going to look at the scorecards for the currencies for this coming week. And after we've looked at the scorecards for the currencies, we're going to look at the individual currencies in the futures markets to give us an idea of how these currencies are performing individually. And then of course, once we've done our relative currency analysis and our individual currency analysis, we want those to match up. And that process points us towards the strongest and the weakest currencies, and therefore the markets which are most likely to move in the coming week. And so once we've identified the best looking currency pairs going into next week, we'll finish as we always do by looking at stocks, gold, silver, and also Bitcoin, which has been performing really well in recent videos. So let's start by having a quick look at the economic calendar. And the first thing to note is you can see this is for the week which has just passed. We do in fact have a piece of data from last week, which is something to pay attention to take note of. And this was the inflation data coming out of the US last Wednesday. And what it showed is we did see inflation coming out above expectations, and it is slightly increasing in the US. So we have this inflationary environment still. And it's because of this that we've been seeing the rise recently in crude oil. And that has also been lifting up the Canadian dollar, which we've been taking advantage of in previous weekly Forex forecast videos. We've been looking for those CAD strength positions now for almost a month. And in fact, last week, CAD was identified as one of the best currencies, in fact, the best currency to look for on the long side. And it was one of the best performing markets last week. So coming into this week, if we flick to the economic data this week, and it's important to take note of the inflation data last week, because alongside the Canadian dollar, you would also be expecting the New Zealand and especially the Australian dollar to be outperforming and to be picking up, to be strengthening in an inflationary environment, since these are also commodity currencies with the Canadian dollar. If we have a look at the data coming out this week, and what we're really looking for here is just a few things. You don't have to worry about all of these pieces of data, because a lot of this is to build out your macro, your fundamental ideas. But in terms of the short-term trading opportunities, what you want to look for is, first of all, interest rate decisions. So the primary thing that you're looking for coming into a week, because if you have an interest rate decision, the markets of that country which the interest rate decision is taking place in, let's say you have a Canadian interest rate decision, the Canadian dollar is unlikely to move until you get that interest rate decision. And if you get involved and it's on a Wednesday and you get involved on a Monday, you're just going to be in a market which goes nowhere for 3 days. So the first thing we're looking for really here is the interest rate decisions. And there are no interest rate decisions coming up this week. The second thing you want to look for really are GDP data and CPI data. Now the reason for this, and you can see we have on Wednesday CPI data coming out of the pound. We have in fact tomorrow evening, so just on the market open for the week, we have New Zealand CPI data. And if we scroll down a little bit further, we also have some Canadian CPI data coming out here on Wednesday. Now the CPI data, the GDP data, these are coincident pieces of economic data, but they can cause sell-offs or rallies in the markets. They can act as catalysts. So if you see, for example, you have CPI data coming out on Wednesday, that is a catalyst to look for or to look out for on Wednesday, and you're looking really for bull flags or bear flags in the direction of the prevailing trend. If you are bullish on, let's say, pound yen, and coming into Wednesday you see CPI data coming out and you see pound yen doing something like this, let's say pound yen is trading to the upside, and then you start to correct like this, and then you have the CPI data and you get a rally, that's your opportunity in the direction of the prevailing trend to look for that type of bull flag setup. So whenever you see these CPI data, keep an eye out for these during the week, because they very often do act as a catalyst in the respective markets. So Canadian dollar, perhaps on Wednesday we start to see it catalyzing, same with the pound on Wednesday, etc. So apart from the inflation data, and of course this will be something that actually could happen overnight, and you could see these setups coming in from Monday in terms of the New Zealand dollar. But apart from those, there's not really, we have some GDP data coming out of China. Maybe this affects the Australian dollar, but not too much we need to worry about. So apart from the CPI data, we don't really have anything else we need to plan around for or really keep an eye out for in terms of short-term trading opportunities this week. But next week, something we have to look at is, and this is going to make more sense when we look at the currency strengths as well, we do have an interest rate decision out of Canada next Wednesday. So although we don't have an interest rate decision this week, we need to bear that in mind, because it does mean that we could this week and potentially next week see the Canadian dollar kind of correcting, see some profit taking coming in the run up to the interest rate decision next Wednesday. So keep that in mind. It's going to make more sense when we look at the currency strengths as well. So when we look at the scorecards going into next week, and especially this week we're comparing them to what we looked at last week, you can notice some changes coming into the markets here. The first thing to note is that the Canadian dollar has increased from 3 to 4, and of course 4 is the maximum score. On the flip side, -4 is the maximum or minimum score, and the Japanese yen has got the maximum short position score at -4, with the Canadian dollar with the maximum positive bullish position at +4. Now this is important because although the Canadian dollar is something we should be looking towards the upside, and also the Japanese yen for further declines, when historically currencies get this strong or this weak, they tend to correct. You tend to see some short-term consolidation and sometimes even a bigger correction. So for anybody that has been following the forecast for the last 3 or 4 weeks and being long on the Canadian dollar pairs or short on the Japanese yen pairs, this is a sign that we should be looking to book some profits on Canadian dollar positions or Japanese yen short positions. Because again, and we'll look at this when we actually look at the markets and look at the futures charts as well, when this happens previously, you start to see a correction take place as profit taking comes into the market. So the second thing to note is that the euro is also weak once again, hasn't really changed. It remains unchanged, and the fact that it's not too weak, it's not a -4 this week, actually suggests there's more downside in the euro, and I do like euro short positions going into this week. It's something I'm going to look at. Another interesting thing to note is that the US dollar is currently neutral from slightly bullish last week. And as the dollar has weakened, we've seen an increase in the strength of the Australian dollar and the New Zealand dollar. So we're starting to see these commodity currencies lining up near the top now. And unlike previously where we had a strong dollar and a strong CAD, and this was signaling a stagflationary environment with low growth, higher inflation, when we start to see the commodity currencies lining up near the top and we see the US dollar weakening, especially alongside the Japanese yen and the other safe haven assets, this is pointing towards more of a reflationary scenario. So this goes back to what we just discussed in the economic calendar, because we're seeing inflation increasing, and we're now seeing those fundamentals playing out last week with the strengthening of the Australian dollar and the New Zealand dollar, which otherwise were kind of neutral going into last week. And the final thing to note is that we also saw a weakening of the Swiss franc and the pound somewhat from last week. And again, as we see those commodity currencies appreciating, we have the safe haven asset of the Swiss franc becoming weaker alongside the US dollar and the Japanese yen. So this is a reflationary type scenario here that the Forex markets are highlighting. So to summarize here, what we're looking at is the Canadian dollar versus the Japanese yen, and also EurOcad to the downside. So Cad Yen to the upside, EurOcad to the downside. These are markets that I am interested in because we have a very strong CAD and a very weak yen. However, we are likely nearing the end of the recent moves in those currencies. And so profit taking and some short-term patience is advised in those markets as a correction is likely. With that being the case, the next thing I'd be interested in is euro shorts to the downside once again. I highlighted a number of euro short opportunities, and they all, apart from euro dollar with the dollar slightly weakening, all the rest of them actually did work out very nicely to the downside. So going into this week, I will also once again be interested in euro short positions. Euro short positions did work nicely last week. We looked at euro pound to the downside, euro franc, euro Aussie to the downside. All of these were nice markets. Euro dollar really didn't go anywhere because the dollar weakened last week. But euro short positions once again is going to be something I'm going to be primarily looking at this week. And because of the strengthening of the commodity currencies, I would like to look at primarily Euro Aussie to the downside this week, Euro New Zealand to the downside this week. I would also be interested in Aussie Swiss franc to the upside, New Zealand Swiss franc to the upside, with that commodity currency vis-a-vis the safe haven asset type of trade setup. So if we look at the individual currencies and we start with the US dollar, you can see we pretty much went nowhere last week. We started the week over in this area. 1, 2, 3, 4, 5 days later, we more or less finished and closed where we closed at the end of last week. So the DXY itself is corrective, it's in a neutral pattern, and this is reflected in the scorecard as well. We see the dollar going from slightly bullish to neutral. And going into this week, what's interesting is we're sitting in an area now where, having retested the previous high, we're actually setting up a potential double top. This would be confirmed if we broke this low, which is the 93.67, and that would actually turn the dollar from being kind of neutral to quite bearish, especially if we broke down here with momentum. So when you have a scenario like this, you don't have to be predictive of the DXY. You can be reactive. You can wait for the market to break out, rather than trying to guess which way it's going to break. Is it going to go higher? Is it going to go lower? You don't have to do that. You can wait for the break, and then you can start to trade the majority of the move after the break happens. And in fact, trying to predict breakouts to the upside or the downside, or to pick highs and lows, is where you're going to lose most of your money. Better to miss that first move, either to the upside or the downside, and then trade in that direction for the majority of the move, what's left of it. So going into this week, the dollar index is still bullish because the uptrend is still intact as long as the market is above the double top confirmation of the 93.67. But relative to the other markets, the dollar really is neutral. It's not something which, going into this week, is highlighting the best trading opportunities. So when you have a neutral dollar, you can do one of two things. Either you don't have to trade the dollar markets, and I could just skip the dollar markets altogether if there are better opportunities. Or the other thing I like to do is, usually when you have a neutral currency, especially the US dollar, you tend to have markets which are structured both ways. You have the dollar, which is structured to the upside against some currencies and structured to the downside. And I personally like to put those on my watch list, and then once the dollar starts to move, if it breaks lower, for example, you can take the dollar short positions or look for setups in the dollar short markets. And if we actually start to break higher and make new highs, you can start to look for setups in the dollar bullish markets. So that's just what I personally prefer to do. But as I say, you can also just leave neutral pairs until they start moving and showing some strength or weakness. So going into next week, I am neutral on the dollar index. If we look at the euro is still structured to the downside. And again, last week, we pretty much went nowhere in the euro. I am still bearish on the euro. We looked at it in the relative analysis. It is one of the weaker currencies. And we even failed to come and retest the previous high over here, despite the fact that we didn't really go anywhere last week in the dollar. So the euro, this is really underlining the fact, although we're lacking a bit of momentum down here, it's really underlining the fact the euro is weak. Yes, we may continue slightly higher, but I would be bearish overall on the euro. If we look at the pound, now the pound is quite interesting, and this chart looks a little bit messy here, but it's quite straightforward. We have a very significant break below the low over here. This is the confirmation point of a major double top in the pound. And what's happening is we've actually broken back above this now this week, and we sit actually in a range. We are stuck between this high over here, which is holding price here, held here, and now we're back at the same place, and also these lows over here, which is acting as a range bottom. So this really, looking at this, is also matching up with what we just looked at in the relative analysis, that the pound is kind of neutral going into next week. It's actually slightly bullish to neutral because we are breaking higher up here. But while it's stuck in that range, it could actually revert to the downside once again, or in fact break higher. So there's no clear direction in the pound going into next week. So again, confirming what we looked at in the relative analysis. Next is the Swiss franc. Now the Swiss franc is a very interesting type of setup because we have this one up, one down type scenario. And this is why I would imagine the Swiss franc is showing a bit of weakness. It's not super weak, but it is slightly weak when we look at the relative analysis. And we have this head and shoulders. Here's your head, here's your left shoulder, here's your right shoulder. Broke down below the low, that's the confirmation point. We then failed essentially, and we have an inverse head and shoulders to the upside. Here's the left shoulder here. And you can see we just broke this last week. So again, the Swiss franc is in an area where it could go either way. It could fail again to the upside and continue down in the direction of the original head and shoulders breakout, or this could actually be a failure of the initial head and shoulders breakout where we see a stronger Swiss franc to the upside. Now, something to note is the SNB, the Swiss National Bank, want to see the Swiss franc heading lower. So any Swiss franc long positions are against the SNB. Better to have short positions, generally speaking, in the Swiss franc with the SNB as a tailwind as opposed to a headwind. So again, really what we're seeing here is we're seeing a lack of market direction for the time being, and it just underscores the fact that the Swiss franc is actually a neutral currency going into next week. Next is the Japanese yen. Now the Japanese yen is very interesting because we looked at this last week, having broken out of this sideways correction, which it had been in for a while. I highlighted for the last 3 weeks Japanese yen weak setups as some of the best setups, and it has been the best performing market outside of the CAD longs we looked at. Now what's interesting is when we looked at the overall scorecard of the Japanese yen and we saw -4, it's the weakest it could possibly be in terms of the scoring system. The last time we saw this was on the 15th of March, where we actually had in the scoring system the Japanese yen at -4, and we had the CAD at +4, which is exactly what we're seeing going into next week. Now what happened on the 15th of March, you can see we had over in this area 1, 2, 3, 4, 5, 6, 7 days of correction following that strength rating, or the weak rating of -4, and we then continued to the downside. And I expect what we had over here is what we're going to see over the next week or so in the Japanese yen. And this is why I do think there is a high risk of a correction, of some profit taking coming in, and a near-term short covering rally over the next week or maybe 2 weeks. So we took out the target to the downside last week. The yen was a really nice market, identified in last week's weekly Forex forecast. Going into this week, what I'd be looking for is perhaps we take out the target to the downside, the next target, and then we start to correct for between, let's say, 5 to 10 days, and then we start to see the next leg down. You can see it looks like we have a 1 wave here, a shallow 2. So if this is the third, we could have a deep 4, because markets tend to alternate like this. If this is deep, this tends to be shallow, and vice versa. Well, this is quite shallow, so I wouldn't be surprised to see this snapping back, probably up into this area before heading lower. So again, bearish on the yen overall, but don't be surprised to see this correcting next week and potentially the week after. The next market is the Canadian dollar. You can see also on the 15th of March, which was the last time we had the Canadian dollar at a rating of 4, which is the highest it can be. What happened? We had 1, 2, 3 days continuing to the upside, and then we had a correction. So again, just as we looked at in the Japanese yen, because the rally in the Canadian dollar is so strong, I would not be surprised to see a near-term top for between, let's say, 5 to 10 days over the next week or two. Now this links back as well to what we looked at in the economic calendar and the fact that we have an interest rate decision next week. What happens when you have an interest rate decision either this week or next week? The market can tend to correct, profit taking comes in before that event. So when you put those two things together, a near-term top in the Canadian dollar for between 5 and 10 days into that interest rate decision is certainly something that I think is a very high probability. Yes, we could continue higher, and in fact you can see here, this is the inverse head and shoulders target from this breakout. Perhaps we come up and we have one more high for a day or two, taking out this target, and then we start to see the correction. So patience is required on the Canadian dollar. I would like to see this correct first. And I think in terms of the Canadian pairs, I think the money's already been made, and we're probably just going to see this correct now into the interest rate decision next week. So if you're getting involved in those CAD pairs, you run the risk of being in a market which goes nowhere for the next week and a half. The next market we're going to look at is the Australian dollar. Now the Australian dollar broke to the upside, and this is a really interesting market here, because what we're seeing here is we are seeing a big inverse head and shoulders which is developing. You can see here is our new high over here, and in the right shoulder we also have a mini inverse head and shoulders which broke out recently last week, and we're seeing some strength now coming into the Australian dollar. So it does look like there's a very good chance we're going to come up and test the major breakout level here of the 74760, which is the next target to the upside. And if we're going to start to pull back and we're going to continue higher, taking out this target, and potentially if this is going to break with momentum, if this is a major reversal, this would be the confirmation point where we could see real momentum coming into the Australian dollar above the 0.74760. So remember what we looked at in the DXY, especially if we get that double top in the DXY and we start to break lower like this. This would be the sign that we're starting to reverse in the dollar, and this would give support to the Australian dollar as it breaks through this major high and potentially develops into a much bigger or much larger uptrend, because an inverse head and shoulder like this is the start. This is where trends are born. So Aussie strength going into this week is definitely something I'm interested in. And finally, if we look at the New Zealand dollar, we see a very similar setup. What we see here is this huge bull flag type pattern in this correction, and we have this inverse head and shoulders, and the right shoulder, which failed to make a low, has now formed a breakout, and it's formed its own inverse head and shoulders down here. And in fact, if I look at this, it's a little bit of a stretch for inverse head and shoulders, because you would have to take it all the way from over here. But this which is not really a textbook head and shoulders or inverse head and shoulders in this case. This reversal, this failure to make a low over here and a reversal higher with momentum in the New Zealand dollar. See this? See this previous high and these breakout, this correction here outside of this downward sloping trend line, this potential inverse head and shoulders, which is a little bit messy because it would be much nicer to see the left shoulder coming down here. This is more textbook when you have the market coming down like this and then up, and then you have these left and right shoulders kind of meeting. That's really a textbook inverse head and shoulders in this case. But either way, we had this correction and now we've broken with momentum. Look how many candles we've broken above this high. This is a market which is indicating it's likely to correct and then continue to the upside like this. If that's the case, New Zealand long positions are definitely something I'm going to be interested in going into this week. So the commodity currencies are looking good for long setups going into this week, but the Canadian dollar has been performing so well recently. A little bit of patience going into that interest rate decision next week is a good idea. It could actually be a little bit risky, and I think we could see it moving sideways between now and next Wednesday. Okay, so now we've looked at the currencies individually and we've done the relative analysis and we've got the scores for the currencies and the strong and the weak going into next week. The first currency pairs we're going to look at are the Canadian pairs because we looked at these in last week's video. Before we look at those, let's just quickly look at crude oil, as this is of course related to the Canadian dollar in the sense that when you have a strong crude oil price, this feeds through the balance of payments and it helps demand for the Canadian dollar, and vice versa when oil is selling off. This suppresses the price of the Canadian dollar. We've seen the Canadian dollar rallying as crude oil has been rising to the upside because of the inflationary environment that we've been in. And going into next week, I do still favour long positions in crude oil. There is no reason as it currently stands to look for anything other than bullish opportunities in crude oil. Any pullback in this market would simply be viewed once again, especially as inflation is picking up, for bullish reversals up towards the previous target set in crude oil at the 83.92. So let's now look at the two top Canadian dollar pairs. Well, the first one is Cad Yen. This was a market I highlighted last week. We had a huge rally. In fact, we've had this to the upside for the last few weeks. We had a huge rally taking out both targets to the upside in this market last week. And going into this week, if you remember the last time we had this scenario, it was back on the 15th of May 2021. And we looked at how the yen rolled over, or actually rallied slightly because it was to the downside, and we looked at how the Canadian dollar, which was strong, rolled over to the downside for about 10 days. And you can see what happened to Cad Yen the last time we had the CAD with a rating of 4 and the yen with a rating of -4. We did rally a little bit higher over the next 5 to 10 days. However, we started to roll over as those markets mean reverted. So just bear in mind with the Canadian yen, especially since we've had such big moves over the last 3 weeks that we've been looking at to the upside, I would now be looking at taking profits if you're in this market, and I would be waiting, leaving these markets until the Canadian interest rate decision next Wednesday. So next CAD pair we're going to look at is EurOcad. Again, the strongest currency versus one of the weakest currencies after the Japanese yen. Now EurOcad to the downside also looks good, but just as we looked at in Cad Yen, this probably requires a bit of patience between now and next Wednesday. I would not be surprised at all to see this market snapping back, to see profit taking coming in and seeing this market correct between now and next Wednesday. So again, I like EurOcad, but patience is required. I'd prefer to wait until next Wednesday because any shorts in this area could be a bit crowded and we could see this snapping back in your face if you start to go short once again this week. So another great market from last week taking out the target. However, patience required on those two markets now in my opinion. I also like Aussie Yen, New Zealand yen, and we can also look at dollar yen. These are markets we looked at previously. We took out both targets to the upside in Aussie yen, and you can see in the daily chart we also have this inverse head and shoulders situation which we've broken out of, and we've broken with momentum. This is an indication of a new trend to the upside. So like the Canadian dollar, I would not be surprised to see the Japanese yen correcting for between 5 and 10 days first. Even if we come up saying we take the target, I do think we're going to see a near-term top. After this correction, Aussie yen to the upside is definitely something I'm going to be interested in once again, up to the 85.44, or if we take this out first, up towards the second target here at the 87.19. Next is New Zealand yen, and we're kind of shooting through these quite quickly because they're all patience trades. They're not really something I'm looking at going into next week, but we're looking at them first because they're the strongest and the weakest currencies. New Zealand yen also had a big rally to the upside. We also have an inverse head and shoulders which is broken out, which is the sign that we have started a new trend to the upside. So I do like New Zealand yen, but because of what we looked at in the yen, look for this correction first in New Zealand yen. And once we get the correction, I wouldn't want to be long up here. Once we get the correction, even if we move a bit higher, that will be the opportunity to start to look for bullish opportunities once again into the 81.50 in New Zealand yen. And the final yen pair we're going to look at is US dollar yen. Another really nice performing market from last week. We had a really strong rally taking out both targets to the upside. And again, after a near-term top, a near-term correction in this market, I would be interested over the next 2 weeks to start to look for further advances to the upside in US dollar yen. But just as we looked at the CAD pairs, I do think we could see a near-term top over the next week or so in Japanese yen. So look for this correction in the yen pairs, and once we have that, perhaps next week in the weekly Forex forecast, that will be setting up nicely for new long positions to the upside. So bullish, but be wary of that near-term top. Okay, so moving on to the markets which are setting up nicely for next week. I do think EurAussie is a really good market going into next week. It's one of my favorite markets because we've started to see the Aussie strengthening from a kind of neutral standpoint. And at the same time, the euro is a -3. It's still weak. Looks like it has some further declines to the downside. This was a market highlighted last week, and we did take out both targets to the downside. So going into this week, what I would like to see in EurAussie, because we do have a little bit of a lack of momentum here, I would like to see a pullback first. So any pullback in EurAussie going into next week is going to be viewed as the opportunity to start to look for bearish reversals. And what I'm going to be looking for is this: the market starts to pull back, we make new highs in the 4 hours, and then we start to break down in that kind of head and shoulders pattern which we've been looking at. That's going to be the opportunity to start to look for bearish setups down to the next key area support to the downside, the target set at the 1.5545. The next market I like going into next week is Euro New Zealand. Again, we're seeing the euro selling off, a weak currency against that commodity currency. If you look at Euro New Zealand, you can see the momentum we have coming into this market, and this is reflected in what we saw in the New Zealand futures market. We had that big momentum rally to the upside, and this, which is a major reversal to the downside with momentum, this head and shoulders reversal after this near-term correction in Euro New Zealand, this is signaling the start of a new trend to the downside. And this sell-off here, what I would be looking for is a continuation of this momentum. So first of all, what I would like to see is take out the target of the 1.6385. Any pullback in this market next week is going to be viewed as the opportunity to look for bearish reversals down to the next key area support to the downside, the target set at the 1.6293. So Euro Aussie and Euro New Zealand are my two favorite euro pairs. The next pair we can look at is Euro Dollar. I always put Euro Dollar into the weekly forecast, no matter whether it's a good market to trade or not, because people ask me to put it into the weekly forecast every week because a lot of people like to trade this market all the time. I am still bearish on Euro Dollar, and I would be viewing this as an opportunity to look for bearish reversals in this market. So if we start to come up and then we break lower like this, just as we saw that momentum break out to the downside, Euro New Zealand for example, that would be the opportunity to look for pullbacks and to start to look for short opportunities down to the 1.1496. The only thing I would say about Euro Dollar is, to me, if the Australian dollar and the New Zealand dollar are stronger than the US dollar, why would I short Euro Dollar to the downside if I can short Euro Aussie or Euro New Zealand? So I don't believe it's as good a setup going into next week. I'm more interested in the commodity currencies versus the euro. The next market to the downside then would also be Euro Pound. This was a market we looked at last week, and we came very close to taking out the target in Euro Pound. And you can see we've broken down again with momentum. We've started to break lower. And when we have momentum like this in the markets, this is usually indicative of further declines. We have this kind of bear flag set up. So any pullback, it's quite a strong sell-off. We're coming close to achieving the target set from last week in Euro Pound. Bear in mind, you're trading, in this scenario, a weak euro versus a neutral pound, and that's why we're seeing this move to the downside, purely because although the pound isn't very strong, the euro is relatively weaker. So any pullback in this market next week would be viewed as an opportunity to start to look for bearish reversals, and going to be looking down towards the next key of support to the downside of the target set at the 84.160. Again, I prefer Euro Aussie and Euro New Zealand, but Euro Pound is another market I'll be keeping my eye on for potential bearish setups. So next market I'm interested in Aussie Franc. Now Aussie Franc is similar to Euro Aussie because the euro and the Swiss franc tend to move in similar ways, although the euro is currently weaker than the Swiss franc, so I prefer euro Aussie. But Aussie franc to the upside is an interesting market. If we go to the bigger time frame here, you can see another Aussie market here reflecting what we saw in the futures market with this major break to the upside, this inverse head and shoulders, which again is indicating this is potentially the start of a new trend to the upside in Aussie Swiss franc. So as we see in the currency scorecards, the Australian dollar strengthening week on week, we also saw the Swiss franc weakening week on week. So going into next week, I do like this market. This is definitely one that I'm going to be keeping an eye on. We took out the previous target at the 0.68230. I'm going to take this off just for the time being because this is the major inverse head and shoulders breakout level, but it's kind of getting in the way here because you can crisscross that. So any pullback in Aussie Swiss franc, I'd like to see this come down because we're lacking momentum. I'd like to see this come down and kind of reset, taking out the lows. Any pullback in this market will be viewed as an opportunity to look for potential bullish reversals up towards the next key resistance, the upside, the target set at the 0.6898. The next market I like is New Zealand Swiss franc. New Zealand Swiss franc, we also have this major inverse head and shoulders, and the right shoulder now has also a mini inverse head and shoulders as well, which we broke out with momentum. So again, this is indicative of a failure to make a new low over here. Here is your low. Here is your now higher low because you've reversed to the upside before taking out the previous low. And this momentum to the upside is also indicative of further advances to the upside. So what I'd like to see here in New Zealand franc is any pullback in this market is going to be viewed as an opportunity to look for bullish reversals up towards the next key resistance, the upside and target set at 0.6581. And the final two markets that we're going to be looking at here in terms of Forex markets are Aussie dollar and New Zealand dollar. Now, the reason I'm interested in these is because as we've gone through these markets, we have $2 bullish setups. We have US dollar Japanese yen, which is a dollar bullish market. We have euro dollar to the downside, which is a dollar bullish market. So if the DXY, which is currently neutral, continues to the upside and fails to break the double top, if you remember we have this potential double top in DXY, if it continues its rally to the upside, what you're going to see is this failure to confirm the double top in the dollar index will result, and new highs taking place, will result in euro dollar doing something like this. It will sell off like this, and then the pullback will be the opportunity to start to look for further declines to the downside. So if the dollar index fails to break the confirmation level and it fails to confirm that double top and instead makes higher highs, I would be looking at euro dollar for those potential dollar bullish setups, in this case euro dollar to the downside. But if we get the US dollar index breaking that double top, especially with momentum, if the DXY starts to do this next week, what you're going to see is instead of breaking to the downside and pulling back like this as a breakout and a kind of bear flag, you will just see euro dollar continue to move to the upside. There won't be any short opportunities in euro dollar. Whereas Aussie dollar and New Zealand dollar will rise to the upside as you get this dollar sell-off. So you can look to potentially play the dollar breakout either way. So with that in mind, if we start to break down in the dollar index, if we come down and we break this low down here, and we confirm this double top next week like this, what I'm going to be doing is I'm going to be flipping over to Aussie and New Zealand. If we start with the Aussie dollar, you can see again, inverse head and shoulders breakout to the upside. Here is your potential one wave over here, or your new high, potential second wave. And the start of the new trend, a major trend, especially if we get the DXY reversal, would be on a break above the 0.71580. And that would be in line with higher inflation expectations as well. So any pullback in this market this week, if we start to pull back like this, and at the same time the DXY does something like this, comes up, we have the double top, and it starts to move up, and as we move up, this moves down, and then the dollar index breaks lower, that's going to be the opportunity to look for bullish reversals up to the 0.71580. And if you get a good entry on here, you could even leave this to see if this breaks the major breakout point or the start of a potential third wave in the bigger picture in Aussie dollar. That would be more of a fundamental position. So again, each person trades and executes differently, but just something to think about going into next week. And on that dollar double top breakout to the downside, I would also be looking at New Zealand dollar to the upside. We have this inverse head and shoulders again, what looks like a potential one wave now, because we failed in this area to come and take out the low. And as the market has started to reverse to the upside, this could very well be the second wave, and we could be starting, especially as we see momentum, we could be starting a third wave, which would start, the trend would be born above the 0.71670. So if we get that double top confirmation next week in the DXY, I will be looking at New Zealand dollar. And what I'd like to see is any pullback in this market first, especially if we get, for example, a correction on the CPI data. Let's say CPI data comes out and we have New Zealand dollar selling off to the downside, and then we start to see the DXY breaking. That would be the opportunity to look for bullish reversals up towards the next key resistance, the upside, the target set, the 0.7167. And again, just like Aussie dollar, if we break this level here, this would be a major breakout to the upside, and we could very well see a big third wave coming into New Zealand dollar, because that would actually be the start of, in the bigger picture, a new trend to the upside. So let's run through the rest of the markets very quickly, because I don't want this video to go on for too long. But having run through the currency complex, we can see the currency markets are starting to transition between a more stagflationary scenario to a more reflationary scenario, as we start to see the dollar index weakening, and we also see the commodity currencies gaining. This reflationary scenario is also being borne out in the stock market last week. We saw an inverse head and shoulders breakout to the upside, and I am bullish on stocks going into this week. So any pullback in the S&P 500 is viewed as an opportunity to look for further advances into the 4544.82, and I would be interested in being long stocks in the S&P 500 next week. Next is the Nasdaq. Now the Nasdaq is also breaking out of a potential inverse head and shoulders, not quite textbook like we just looked at in the S&P 500. This is very similar to the sloping inverse head and shoulders we saw previously. But either way, we are starting to break to the upside with momentum, a potential third wave coming now in the Nasdaq. So any pullback in this market next week is now viewed as an opportunity to start to look for bullish setups. And I would also be interested in being long the Nasdaq stocks. I'm looking for Nasdaq to move into the 15549.03. Next is the Dow Jones. Now the Dow Jones has also broken to the upside. We've started to reverse at the bottom. This is a little bit of a range here. And so going into next week, I do favor long positions in the Dow Jones. Any correction is simply viewed now as an opportunity to start to look for bullish reversals up towards the next key resistance, the upside, and the target set at the 35924.21. Next is the Russell. Now the Russell is a market that has held up as all the other markets were selling off. The small cap index has just moved sideways, and I mentioned in previous videos that this was a sign that we're not going to see a market crash. This was one of the signs that was showing that we're going to get a correction in S&P 500, but we're going to start to move higher, and we started to break higher last week. So very simply put, going into this week, I do still favor long positions in the Russell. Any pullback in this market is viewed as an opportunity to once again start to look for bullish setups and bullish reversals. I'm going to be looking up towards the next key resistance, the upside, and the target set at the 2323.32. Next is the Nifty. Now the Nifty has been a really good market that's just been taking out target after target to the upside. We've been bullish on the Nifty even as the US indices corrected, and we did take out the previous target set at the 18,04715. Going into this week, I am still bullish on the Nifty. Any pullback in this market is simply viewed as another opportunity to look for bullish reversals up towards the next key resistance, the upside, and the target set at the 18,569.20. And finishing up with gold, silver, and Bitcoin. If we look at gold, we can see last week we did actually reverse to the upside. We broke this inverse head and shoulders, but we came down quite hard. And the problem with gold last week breaking out was the dollar is not yet bearish. It's still fairly strong. And unless we get that double top reversal, gold is going to be capped. Any move to the upside is going to be followed by a sell-off like this, or you're going to see the market be choppy. Gold is a market I'm going to keep my eye on next week. And if we take this off here just very quickly, what I want to be looking for next week is I want to be looking for that reversal in the dollar index. So if the dollar index breaks down below the confirmation, especially with momentum, what you're going to see is you're going to see gold coming down, and then you're going to see it start to break up like this. If that takes place, I'm going to be looking at initiating longs up towards the next key resistance, the upside, and target set for the 1801.78, and if we can break through here, I'm going to be looking at target 2 at the 1819.11. So another setup going into next week, which I'm going to be reactive on, and it will be based on whether the DXY reverses to the downside or not. If the DXY continues higher, I will not be interested in trading gold next week. Next is silver. Silver is another market which will be based on whether we get that reversal in the DXY. If we don't reverse lower in the DXY, I won't trade silver because it's structured to the upside, and I only like to trade gold and silver when they're in line with the dollar being either bearish or bullish, depending on which way I'm looking to trade the markets. So very simply put, going into next week, I'm going to be looking for a pullback in silver, and what I want to see is I want to see that coincide with the DXY breaking lower. Eventually, perhaps it pulls back a little bit here, and then we get the correction, and then it breaks lower, confirming the double top reversal. We'll see an initial break higher in the 4 hours, and then that would be the opportunity to start to look for bullish setups up towards the 21.15, and if we can break through here, going to be looking up towards the 24.61. And last but not least is Bitcoin. Now, Bitcoin has been a fantastic performing market. We've been bullish on this, really. I can't remember exactly where we turned bullish, but we've captured the majority of this move to the upside in the weekly Forex forecast. We have broken above the previous correction here with momentum. We took out the previous target at the 58,622. And so going into this week, any pullback in this market will be viewed as an opportunity to start to look for bullish setups up towards the next key resistance, the upside and the target set at the 64,690. So that is it from me for this week, guys. I will try and get the video closer to the 30-minute mark in future videos. We have gone a little bit longer than we did last week, but I have indexed the video down below so you can jump to bits and pieces as you wish. As always, I hope you enjoyed the video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend. I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.